Hi everyone, it's Alex here at Sestrian Capital Research. Welcome to our weekly webinar for Thursday, the 12th of December. It's currently 4:15 Eastern for the benefit of the tape. Today, I have a really special guest, which is Jason Krutsky, who's one of the senior team at TrendSpider. TrendSpider, as you may know, is one of the leading trading software companies these days. It's come from nowhere really a few years ago and taken the world pretty much by storm. We're a big TrendSpider user. We use their charts across all of our services to good effect. And Jason's going to talk to us today about some of their latest and most advanced features that go, as you'll see, way beyond their chart capabilities. So I'll hand over to Jason shortly. Before that, just to run through everything else we're going to cover today. We're going to run through a bunch of single stock charts, so names that a number of our subscribers have asked for. So Adobe, ARM, DELL, Okta, Pinterest, and Palantir we'll look at. As always, we'll take a look at the US equity indices. We'll look at the S&P, the NASDAQ, the Dow, and the Russell. I want to canter through oil, bonds, and volatility, meaning the VIX, just to get a fuller picture of what's going on in markets. And as always, we run these sessions on a live open mic basis, on an Ask Us Anything live Q&A basis. How we'll handle this is, in a moment, we'll do our disclaimer. After that, I'm going to hand over to Jason, and he's going to present the latest in TrendSpider to us. We'll switch back to Sestrian stuff then, and we'll have mics on after Jason, so you can ask any questions, fire at him, and then throughout the Sestrian stuff, as always, you can fire any questions at myself. At any time, you can use the question or the comment function here in the webinar platform, or again, use your mic and shout into the system. I'm going to do our disclaimer next, and after that, I'm going to hand over to Jason. So, disclaimer, which is on your screen right now. So, disclaimer, this webinar is intended for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in the webinar is not an offer to sell or the solicitation of an offer to buy any securities. Nothing in the webinar is intended to be investment advice, and nor should it be relied upon to make investment decisions. Sestrian Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stocks, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in the webinar or their employees or affiliates may be customers of Sestrian Capital Research. Sestrian Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, so I'm going to hand over to Jason. I'm going to make him a presenter right now. And Jason, maybe you can start by introducing yourself and telling us all what you do at TrendSpider, and then maybe you can walk us through some of the latest about what you guys are doing.
Yeah, sure thing, Alex. Thank you so much for having me today. My name's Jason Krutsky. It's a pleasure to get to be here to present for you guys. I'm just trying to get my screen going. While I do that, I am the senior evangelist here at TrendSpider. So if you've ever watched a video on our YouTube page or you've read a software update or a blog post, that's all me. I make all that stuff. So I'm going to try and squeeze in as many cool features as I can in this very short amount of time that we have. We've made a ton of improvements to the platform this year, a lot of changes. One of the biggest requests that we got and that we've gotten ever since I've been here for almost 5 years now, is fundamental data. And happy to report that we've brought fundamental data to the platform this year. So you name it, any fundamental data point that you could think of, I'm scrolling through them here so you can kind of see just how many of them there are. They are all available, and these fundamental data points can be utilized kind of across the platform. So I'm just going to add a few here if you just search for them. You can add them to your chart, and essentially this is just a visualization of whatever data point that you're interested in. It's got the year-over-year percentage change, so you can kind of see how things have changed from quarter to quarter and also see how price has been affected by those changes. Inside of this indicator, you can also utilize this compare functionality to compare that particular data point of that particular company. In this case, we're looking at Tesla EPS, compare it to how its EPS stacks up against similar names, whether it be in the same sector or the same market cap weighting, or rather same industry, sorry. So that's like the first piece of how we've implemented fundamentals, by simply just being able to visualize them. But you can also implement them into things like alerts and things like scans. In addition to fundamentals, another really key it's an indicator, but it's actually kind of a little bit bigger than that, is a tool called relative performance. So this allows you to kind of see the relative performance of an asset relative to all of the stocks in its same industry group or same sector or in a major index like the S&P 500. If any of you guys are familiar with IBD, you're probably familiar with something called the relative strength score. This is our version of the relative strength score. It's calculated pretty much the exact same way. And between having fundamentals now and having this relative performance score, we're able to do things like create this. This is the CanSlim scan. And so, like, if you're an investor that's interested in CanSlim names, this is a whole methodology of trading. There are products that are devoted specifically just to CanSlim, and now you can identify those names really quickly and easily using TrendSpider. Another kind of really powerful, kind of simple, but really powerful thing that we've brought to the platform this year, something that we call scheduled scanning. So anytime you create a scanner, if you'd like to have those results sent to your inbox, just quick and easy, you can choose to run the scanner on a schedule, just set it for the days that you want and the times that you want. And every single day, you're going to get an email that looks kind of like this. And this email is going to essentially tell you what names have been added to the list. Those are the blue names. What names have been taken out of the list. Those are the red ones. What names are still on the list, the gray ones. So, the early morning process of like scanning and looking for setups, that sort of thing, this kind of makes that process quite more efficient. It's something that I utilize every day. This isn't the exact same scan, but it's something that I'm looking for every day. Another tool that we have expanded upon a lot this year is something called What's Happening Now. What's Happening Now is it's a place for all kinds of extraneous data. If you click up here where it says add a feed, you'll see there are things like unusual options data, insider trades data, analyst estimates, Congress trading data, all kinds of different feeds that you can access. So in this particular case, I've got insider trades here, I've got Congress trades here, and we've really made the filtering capability of this like super robust. So you could just come in and say, I want to find all the insiders who have bought, and I want to specifically define that their buys were over $1 million, right? And I could keep on going with this if I wanted to. I could define specific companies or specific insiders, whatever. And I'll just get that information kind of sequestered and filtered out for me. All of these will filter back to the charts. So by clicking on the ticker, you can kind of quickly analyze the chart of that particular company as well. So lots of extra data to help you. Like this really helps me kind of find trade ideas. Basically, I'll use it to, where are insiders buying a lot? Where are they selling a lot? Where are the unusual options orders? Where are the big unusual options orders? That sort of thing. What else? Two other things. So three other things. Right here where it says stock market map. So this is you've definitely seen these sorts of tools before elsewhere, but these are pretty new to our platform. We've got bubble charts over here, and then we've got your standard like tile charts, your heat maps. And so these kind of, in my opinion, they kind of serve two different functions. With that CanSlim scan that I showed you a moment ago, I went ahead and made a watch list, and I've loaded that watch list into both of these particular types of charts. And so on the right-hand side, we've got the bubble chart. The bubble chart can be adjusted, or you can define the horizontal and the vertical axis. You can do it by price change over different periods of time. You could do it by a ton of different fundamental data. So I like to use the bubble maps here for just understanding price change. Where are those names in that group of names? What's their price change distribution? What names are doing the best this week? What names are doing the best this quarter? Obviously, you've got, a wide distribution of things going on here. Everybody's super focused on Palantir. It's a CanSlim name. It's doing great, but there are other names. This YPF that happens to be quite exceeding its returns, also a CanSlim name. Another kind of use case here for this is like sector rotation. So oftentimes I'll have my index ETFs set here, and I'll just be watching these move in real time, so I can kind of monitor what's changing, Where is it moving? What was doing well last week that isn't doing well this week, and so on. On the opposite side, you have the same exact functionality. You can bring in any sort of list of symbols. I've just got that same canceled list here. And you can define the criteria that defines the tile size and the tile color. So on this end, I like to utilize fundamental metrics, and then I usually will keep these as like linear charts using the same fundamental metric. So I can just quickly and easily see, you know, just whatever I'm looking for in that regard. Let's see here. Oh, in the strategy tester. Now, everybody is probably pretty familiar with our strategy testing capabilities. I don't want to get too in the weeds on that. But one general thing that we have, you know, experienced as just users of the platform ourselves, but also just from talking to other traders about the platform, is the kind of frustration around strategy testing, right? It's very easy to run a strategy test, get some results back, but if you start trying that test on other names or what have you, it's hard to remember. It's hard to remember what the previous test said and what the previous test before that said. So we actually created a fix to that problem called the Strategy Variance Explorer. I'm just going to go ahead and pop over here. So the Strategy Variance Explorer is a kind of an all new way to utilize the strategy tester functionality and capabilities. What you can do is you can load up any mix of strategies, time frames for the strategy, back test depths for the strategy, and symbols up to 52 variants at once. So, you know, one strategy on one time frame across 52 different symbols, or 3 strategies on 10 different symbols on 2 different time frames. You know, you do the math on that, but ultimately what you can do is you can run a bunch of tests at once. So say you have a strategy that you like to utilize on one particular name, and maybe you want to test and see how that strategy happens to do on other names in the same sector, or maybe other names that are kind of similar. Here I've got a good handful of the Mag 7 names. So just like a basic 821 bull cross, looking for
like the basket
resolutions on a lot of different time frames, and then on the
been an interesting dynamic.
Nancy, can you go on mute?
If it wasn't for AI, I think in general the space would not be having such a great time. AI is very strong. Most of the other markets broadly in the industry so far this year have not been great.
Okay, there we go. Carry on.
So this is just a quick and easy way to get down to the meat of like how your strategy does across perhaps all of the names that you might be interested in trading it on. So you can see all of that data broken down. You can, of course, filter all of this. You got a lot of different data points here, from performance of the asset to win rate to max drawdown to average return. If you're into strategy building, this tool is going to be wildly helpful for you. And if you're not yet into strategy building and you're thinking about trying to get into strategy building, I'm going to end this thing on the final tool that we just released a couple weeks ago, called the AI Strategy Lab. Alex said that you guys might be interested in checking this out. We'll just go to it here. So the AI Strategy Lab is an all new way to develop strategies, trading strategies. And really what it seeks to do, the purpose of the lab, is to kind of take the hardest parts of strategy creation out of the process. If any of you guys are familiar with strategy creation, you know it can be pretty difficult, right? It requires generally quite a bit of back testing. It requires a decent knowledge of technical analysis. You got to be able to define, you know, what different indicators are doing, what price action is doing, to come up with these different strategies. So the AI Strategy Lab is really built to address a big portion of that lift, which is essentially coming up with the rules for getting into a trade. That's kind of the hardest part. So in the lab, instead of coming up with the rules for developing the trade, what you do is you come up with kind of like the goal of the trade and the asset that you want to trade or that you want to trade on, and kind of the general thing that you might be looking for. So I'll kind of like talk you through this is a model that the lab has created. And the way that this model was created was by defining this stuff over here. So we defined that we wanted to trade on Tesla, or rather that we wanted to train this model on Tesla on the 1 hour time frame on this section of price action. We defined a basic, we want to kind of like the parameters, the risk parameters, and the horizon for the trade. How long do we want to be in a trade? What kind of percentage return are we trying to achieve? And what kind of risk are we willing to take for achieving that return? We would call that the reward to risk ratio. So you define that. You define the type of model. We have a couple of different AI models that you can choose from, varying degrees of power and complexity. And then you can essentially, utilizing that stuff, you can choose to get AI suggestions, right? I can use essentially like ChatGPT prompts. We've got a bunch of them pre-made here. You can make your own. You can type in your own things. You say what you're looking for, like in this particular case, focus on potential reversal signals for my prediction horizon, right? And instantly the AI lab is going to start creating or thinking through inputs that essentially are meant to look for, meant to create a signal in times in the Tesla chart where my prediction horizon can actually be true, where I could actually hit a 4% return in a 10 candle window before a 4% stop loss is hit. So instead of me creating the parameters that define this entry, it creates a set of functions and a set of different indicators that it can build a model off of. And so just like that, I say start training the model. It starts training the model. And within maybe 20 seconds or so, I'm going to get a model back. And a model, again, looks like this. These are all different models that all, if you look at the model inputs here, the shaded blue lines, these are all, different models that utilize different inputs. And they all have kind of different charts here. And the charts kind of suggest whether or not the model is worth kind of trying to solidify and back test. So once you have one of these models made, you'll have a little tab at the top that'll either say go back test. We've got sometimes you'll see, let's see, I've gotten rid of a lot of the lousy models, but you'll get 3 different tags. And if you get this go back test tag, then that tells you, okay, the model is kind of interesting. Maybe I should go kind of play around with it and see if there's anything to it. You can very quickly deploy it. We'll call it, Sestrian model test. And as quickly as I've done that, I can come over here into the strategy tester, type in Sestrian model test, and just like that, the model that I built is now in the strategy tester, ready for me to kind of start running on Tesla to see how it performs. I could start playing around with the conditions here to try and adjust it and make it better. By doing that, it's also now an indicator on the platform. So I can now scan for essentially the signals that model is generating. I can test it on other names. I can just utilize it all over the platform. I can get alerts on it. So, Alex, I think I'm probably in about 15 minutes here.
Yeah,
I don't want to go over time.
No, that's great. Thank you, Jason. I have a couple of questions for you.
Sure.
So at some point, so you guys run this signal stack service as well, whereby anyone that wants to connect the charts and their strategies that they build in your world, if they want to connect that to their brokerage for it to execute actual live trades, they can do that with you, right? And so correct. I'm guessing at some point you'll be able to connect your AI model strategy through Signal Stack to, once you've built something, to be able to automate the execution. Is that the plan? Yeah,
you already can.
Oh, you can do that now? Oh, fantastic.
Yeah, okay. Yeah, you could do that now. So let's see here. Find the model that I made yesterday. Yeah, so here's a model that I built on Tesla yesterday. And once you run a model, or once you run a strategy test, right, all you got to do is launch it as a bot. And Once you have selected that, there's a couple of things that I can do with a bot. You don't have to necessarily go right into a live trading environment.
Yeah.
You can just have those signals. So the signals, the entry and exit signals from the model can be texted to you so that you can almost do like some forward testing. You could just like visually know and like get a message from us that says, hey, the model just hit, or you just got a
Yeah.
signal from the model. You can
Yeah.
get those alerts sent to your email, and then or you can webhook them.
Yeah.
That's what Signal Stack does, right? It links your brokerage to a TrendSpider account via a webhook. And so, yeah, if I wanted to, I could start forward testing this model into like a paper trading account. I could take this model live if I wanted to as well.
Yeah, great. That's terrific. We have a question from someone for a second. I want to finish off by saying that if I look at our own business, our fastest selling service ever is a service we run called Signal Flow AI, which folks can see on our website. And it's a different thing to what Jason's talking about here. But my takeaway from that is that everybody's looking for machines to help them make better investment and trading decisions, right? Nobody wants to completely outsource things to a machine, because we can all imagine how scary that can get, particularly if you connect your live brokerage account. But from using these sorts of services myself as a trader and investor and watching our subscribers do it, I would say that the appeal of have something that's by definition unemotional, look at a security that you yourself are interested in, it's a tremendous asset to have. You don't have to agree with what the machine says, but the fact that the machine has said it without fear or greed, it's just a set of numbers, I personally find a really powerful piece of analysis. I'm not sure we're yet at the place where you go, I'm going to give my life savings over to a model to run it. I'm not sure we're there yet, but that day will maybe come. And I think all these efforts to include AI in these decisions are tremendous. And I know TrendSpider is super serious about this capability here. They've just gotten started with it. I would expect it to develop greatly over time. And so if anyone's interested, I really would encourage people to take a look. Before we take a question, Jason, I'm just going to say that Sestrian is a TrendSpider affiliate partner. That means that if you sign up for a paid TrendSpider account using a link that we provide, we may earn a referral fee. That's just for disclosure, so we're open and transparent. But the reason we're an affiliate partner is because we think the products are terrific. We've used the charting tools for a long time. And one of the reasons we've done so is, one, the product capability is really good. Two, the company is terrific, I think, at teaching investors and traders different methods. So one of the key aspects of our analysis, we use Wyckoff rotation and volume shelf analysis all the time. I learned from that from TrendSpider tools, and that's made a big difference to my personal investing and trading and to us as a business. And the final thing is the support that we get from TrendSpider's terrific. So if you have any questions, problems, would like to do things a bit differently, incorporate something they do in our workflow a bit differently, company's great. So if you're at all interested in what the company does, head to our website, sestriancapitalresearch.com. Scroll down, there's a link at the bottom that says Get TrendSpider. They have a super promotion on right now with up to 75% discounts on their services. So I'd encourage everyone to take a look. So again, sestriancapitalresearch.com. Scroll down, click the Get TrendSpider button, and lots of offers there. Jason, I've got a couple of questions coming forward for you. I'm just going to switch folks' mics back on again. Paloma, you on? I think. Paloma, you still there? Okay, I think Paloma's gone. Hang
on. Alex, can folks here see the chat?
They should be able to, yes.
Okay, cool. Yeah, so what I did, I just linked a video of a webinar that I hosted just yesterday.
Yeah. Okay.
I just wanted to share it with folks. It's all about the strategy lab. It's it goes really in depth, and I know that me firing through it for 5 minutes really answers almost 0 questions about it. But this video should help answer quite a few questions. So
okay,
if
great.
anybody's interested.
Okay, I think Paloma's got something else. So look, let's drop off for now. Jason, I really appreciate you coming to spend time with us. Again, if anyone's interested in the tools, head to sesstreamcapitalresearch.com, scroll down, hit Get TrendSpider, learn all about it. And again, there's a link that Jason just posted here in chat. I'll repost it later when I distribute the recording of the webinar. Do take a look. Jason, thanks so much, and great to see TrendSpider going from strength to strength. Thanks a lot.
Yeah, cheers, Alex. Thank you.
Okay, man. Talk to you soon.
Bye.
Okay, folks, well, let's get back to regular SesStream business. So we're going to run through a bunch of single stock charts. These are all stocks that some of our subscribers have asked to take a look at. I'm going to start with Adobe, which, as you know, has had some troubles of late. So let's get that on your screen right now. I'm going to start off with the larger degree chart. Okay, here we go. So this is a chart, a weekly chart that goes all the way back to January 2019. As you can see, for what's a pretty stable part of the furniture sort of enterprise software stock, it's one hellishly volatile stock. And here's how we see Adobe having moved over time. So this is back at the end of 2018, back at the end of a sort of pretty rough Q4 of the market in 2018 here. The stock makes a sizable move up from here to the end of the 2021 bull market, puts in a 1, 2, 3, 4, 5 wave sequence that takes the stock from around 205 to around 703. And note, it has still not made a new high since that time, unlike almost everything else in software, in the bigger stocks at any rate. It then puts in an absolutely hellish drop. So it drops to below the 78.6 Fibonacci retrace of that big move up. And again, given how big and stable a company is, that's pretty remarkable now. CRM, Salesforce.com did something similar, again, despite a big recurring revenue model. So it's worth just looking at how volatile this name is. And in some ways, that makes it a pretty interesting stock to have in the toolkit, because you know that the company isn't going away tomorrow. You know that the business is going to still keep growing and churning out cash, and the fundamentals are strong, the balance sheet's safe, but it's a very tradable stock, I think. This is the bear market low, September 22. It then puts in, a big move up, sells down to the 50% retrace of that move from the 22 lows to the January 24 highs. And, there's a lot of fuss about what the stock has just done, but if we zoom in a bit, this is a shorter term time frame, this is a daily chart that goes back to the June lows. Actually, look at all it's done. It's put in a double bottom. Okay, so this is the June low, so the May low, end of May at 433. Moves up wave 1 high to 588, and then it puts in this wave 2 low between the 61.8 and the 78.6 retrace of that May to September move. Starts to climb up, looks like it's putting in a wave 3 up. We get earnings, poor reaction to earnings, and then look what happens, right? It's dropped, bounced at exactly the low that was put in early November. So, yeah, whilst it can be disarming to see a drop like this from 557 just before earnings to an intraday low of 470, fact is it held at that low. So we can move this over a bit, and we can say, well, that's a double tested low there. This green support zone box, we drew this way back here to indicate this 61.8 to 78.6 retrace zone, and that's held again. So if support holds around here, anywhere above 466, I would say that this can see a renewed bullish move up. Not tomorrow, it's not going to suddenly reach for the sky, but if you trace just a normal chart pattern that this might follow, then there's no reason why we couldn't be looking at this stock in a few months' time and it be at 630, maybe beyond. And so I don't own Adobe myself. I have owned it in the past. I've done okay with it, but I wouldn't be too bearish on this as long as it holds over 466. And why that's important is it's that 78.6 retrace of the move up from the May lows to the September highs. That's Adobe. Let's move on. Next one we wanted to do was ARM, chip stock, ARM Holdings. Now this one just reported last month, and let's go on to the daily chart here. Again, extremely volatile stock. In truth, it's a relatively recent member of the public markets, and so that means stocks always take a little while to find their feet. But if we just walk through the story of the stock here for a moment. So it comes to market September last year, puts in a post-IPO low at around 46, and then starts to climb up in a, again, hellishly volatile, but very compliant with standard technical patterns sort of way. So initial 1 up to the end of December 23, shallow 2 down, big wave 3 up to 163, that peaks up there in February 24, a wave 4 down, that it's a big correction, but it holds over that wave 1 high, so that's all holding that pattern nicely. And then a big wave 5 extension that puts in an all-time high just shy of 190. We then get a sizable A, B, C correction, and then the cycle starts again. So this low here, August the 5th, so this corresponds with yen again, the end of the world, and the stock has started to put in, I think, a new wave 3 up. So from the August the 5th low, we got a move up from 97 up to 138, a nice wave 2 retrace down that held at the 0.5 retrace, and then this wave 3 up here. Now across semiconductor right now, there's a whole lot of stocks and ETFs that around October this year or even earlier put in, roughly speaking, a 1.236 extension of this wave 1 from the August the 5th lows placed at this wave 2 low. All these charts look the same, and then sort of drifted sideways or down doing nothing, and ARM's no exception. So I think the fate of ARM's stock probably lies with whatever is going to happen with semiconductor now. Broadcom reported today after the close. Where is it today? 184. By the look of it, just 1 second while I take a look at Broadcom. 184, yeah. So it moved up a little bit on close. So we'll see how ARM reacts to that. But it's potentially a nice bullish chart. It's volatile for sure, but semiconductor is very under-owned, I think, at the moment. Even Nvidia is sort of tracking somewhat sideways, and my probably unpopular, possibly wrong view is I think money's going to rotate into semiconductor. I think ARM can benefit. The rider to that, by the way, is ARM fundamentals, which will just pop on your screen here right now, are, in my opinion, not very good. Now, ARM, I think, has long-term a really bright future. It's a by design, low-power company. So the cores that it designs and licenses require very little power to run it, in complete contrast to standard GPU design right now, which is, as everybody knows, massively power hungry. And I think in AI, there's two solutions to the power requirements. You either build more and more and more and more power stations, which in the end is probably not sustainable, or you change your chip design to something requiring less power in the first place. And I would say that, remember, what ARM does is it designs and it licenses cores, as in chip cores, if you like, chip logic around which larger devices can be built. So I have a long-term view on ARM that it will do well from other chip companies and other system companies' designs for AI, semiconductor, and systems. Now, that's not true today. This is a thesis today. It's not reality today. But I think long-term, I feel pretty good about ARM. Short-term, numbers aren't that great, in my opinion. So this is the quarter just reported. So growth fell to 5% year on year, down from 47% in March, 39% in June. Okay, semiconductor is cyclical for sure, but look at the TTM numbers. So 21% in March for the prior year, 31% June, 25% September, and guiding down again to 24% in December. Gross margins held up really well. If you think about what the company does, it doesn't have any inventory. There's no third-party payaway to speak of, so it's always going to have these huge gross margins. That's just a function of being a licensing business as opposed to manufacturing or a fabless business. If you look at EBITDA margins, then you can be forgiven for thinking this is a very cash generative business. So, 40-ish% EBITDA margins drop down to 38 on a TTM basis this quarter. You think that's really good. Unfortunately, it's not really turning into cash flow, which is kind of a strange one. And there isn't much capex. Okay, again, this is a license. It's a software business basically. It creates designs for semiconductors and it licenses them. So it's never going to have to buy huge amounts of machines, buy software licenses, things like that. But $60 million a quarter in capex is really not very much when revenue is just shy of $1 billion for each quarter. Where the money's going is in something called change in working capital, and in simple terms, change in working capital means if you've got a positive number, it means you're getting paid by your customers faster than you're paying your suppliers. A negative number means you're paying your suppliers faster than you're getting paid by your customers. Now, whether working capital change is typically positive or typically negative is a statement about the strength of any company's position in its value chain. So you'll see with enterprise software companies, for instance, where they sell must-have software, they typically have positive change in working capital the whole time. In other words, they're getting paid typically ahead of revenue, ahead of profit, and before they pay their suppliers. In other words, they get cash sweeping in ahead of recognized revenues and profits. And that's because they have leverage over their customers. Very often, semiconductor companies, you don't see that. Even with NVIDIA, you don't see that. And NVIDIA obviously has a ton of leverage over its customers right now, but even NVIDIA has, neutral to negative working capital most of the time. ARM, it doesn't have that many customers, and its customers tend to be large businesses. So it's not really surprising that it's somewhat beholden to its customers, and it doesn't have, an army of suppliers to bid up on. So that it's somewhat negative change in working capital, I think, is okay. But it's a big delta at the moment, and it takes margins from 38% on the EBITDA line down to 15% on cash flow. Now that's a lot, and if it sustains at that sort of delta, it's telling you that something isn't quite right here. The worst possibility, and I'm not saying this is the case, the worst possibility is the profit recognition is aggressive, meaning they're recognizing profit way before they're getting paid for it. Okay, and there are rules in GAAP and frankly many other accounting standards about how you should recognize profit. I'm sure they're following those rules. I'm sure there's not an issue here, but one needs to watch these things. When company accounting gets a bit ambitious, shall we say, the first place it always shows up is in the delta between accounting profit and cash flow. So when you see a big gap like that, it's worth looking at. The best case is this is just timing of payments, and the next quarter we see a big positive number. So in March there was a big positive number. This year, March last year, big positive number. So it could be that this is just cyclical timing, that in each of the June and the September quarters, it's just weak on the payments front, and it hasn't been a public company for long enough to really get a feel for the timing of its cash flow. So hopefully next quarter we see a big inflow of working capital and these cash flow margins tick back up and get to be nearer to profit margins. So say it's a red flag or anything at this stage, but I think it's something to watch. Balance sheet, by the way, fine, $3 billion net cash. It's ticking down a bit, so $3.7 billion in March, 3.2 September, but still pretty good, obviously. The other thing just to watch, though, is deferred revenue. So deferred revenue is orders that have been placed by customers that have been then prepaid by customers before the product has been delivered. And so you want to see deferred revenue prepaid sales basically, growing positively and ideally growing faster than recognized revenue. Well, it isn't at ARM, it's shrinking. So it shrank less badly than the last 2 quarters, but it's still down by 10%. And it's now 26% of trailing 12 months revenue, whereas 15 months ago it was 42%. So it looks like ARM is losing a bit of power in its value chain, which I'm slightly puzzled by, I confess. So on the fundamentals, I think it's okay. Some concerns. I don't own ARM. This is one of the reasons why. On the chart, I think it's okay, and I think if semiconductor moves up, probably it can take ARM with it. I just would be a bit cautious personally on those fundamentals. Let's do a couple more, and then we can take some questions. So let's do DELL. DELL, another one which didn't react very well to earnings, but I have a suspicion might work out okay. Now, this is the longer term chart for DELL. We start this chart, it's a weekly chart in TrendSpider back in the COVID lows. So March 2020, it was $14 a share, ran up to, $62 for the bull market high at the end of 21, early 22. Fairly shallow retrace for this sort of name, so 61.8 retrace. You saw that Adobe and Salesforce fell by 78.6% or more. DELL held at the 61.8, and it's a systems company. You would expect that to be less robust than a software company, but the stock held up so well. It's good. Huge wave 3 up here, 300% extension, which you hit that in May this year. ABC correction for a wave 4 low. It looks to me like it's in a wave 5 up, which, if this pattern holds, can make a new high somewhere over 181 and maybe terminate somewhere in the 190 plus range would be my guess. Now, there was a pretty weak reaction to earnings, and if we zoom in, we can look at some of the key levels on the chart. We'll look at fundamentals in a minute. Fundamentals pretty good, I think. So here's DELL. This is a daily chart, and this runs from the August the 5th low. Now, in short, this is what I think about DELL's prospects. So here we go, the August the 5th low, 86, wave 1 high at the end of August, 117, puts in a shallow wave 2 here, just a 0.5 retrace, and then puts in what is probably a wave 3 high there, up at 148. So not a huge wave 3, but it certainly ticks the boxes between 1.236 and 1.618. And then this post-earnings drop. Now, key level, the one I've been watching, is this wave 1 high back here, 117, 118. So the theory of Elliott waves, and it's only a theory, it's not, it's not science, it's just pattern recognition, says something like this, which is if you are in a wave 4 down, in other words, you've had your 1, 2, big wave 3, you've got some, selling off, some profit taking after the big move up, and then you've got sort of a last hurrah in the current cycle to move up, then for that to be truly a wave 4 and not something else, more gruesome, it kind of needs to hold over that wave 1 high. And we can get all religious about, to the cent of the dollar, all of that. But my own view is if it's sort of in the region of the prior wave 1 high and holds there for support, you're probably okay. DELL is right there, and on a day when the market was fairly weak, DELL was up a touch, and it closed out at closed at 116. Has moved up a little bit with Broadcom by the look of it, and I think DELL will hold there, and I think it can put in a 5th wave up. So price right now just shy of 120, and I suspect this can make a high over this wave 3 high. So I think we might see DELL make, I'm going to say 150. And if you are thinking of entering a DELL trade right now, you've also got a pretty nice logical place to put stops. So you could say, well, look, if it drops much below this post-earnings low at 115 and something bad has happened, this chart's wrong, that's not a 1, 2, 3, that's probably a 1, this is a 2, that might mean that it corrects all the way down to the 90s. You don't want that. So you can think about placing a stop somewhere below that post-earnings low to minimize your losses in the event that it drops, while still gunning for this move up to potentially above that wave 3 high, and let's call it 150 plus to the upside. So I quite like the risk reward there. You've got maybe $10 down to, maybe $30 up. So 3 to 1 up to down. I quite like those odds. If we look at the fundamentals of DELL on your screen right now, I thought it was a good quarter personally. So this is the October quarter, 9.5% revenue growth. So that accelerated for each of the last 1, 2, 3 quarters. TTM revenue growth now positive at 3%. It's not exciting, but it was negative 14% in January this year. Gross margin is always going to be low. This is a company that buys stuff from other people and bolts it together. So you're not going to see the 90s, 70s, or even the 60s here. It's always going to be a low gross margin. But EBITDA margins hold at around 10%. Cash flow margins low, but again, look at the working capital here. So working capital over the cycle, it's fairly neutral. It gets paid in and pays out about evenly over the course of a few quarters. And so although there is meaningful capex each quarter, again, it's a systems business, the delta between EBITDA and cash flow margins is fairly consistent. So EBITDA margins are 10%, cash flow margins are about half that. It's sort of what you'd expect with a hardware business like this. The company's levered, so $18 billion of net debt and $10 billion of trailing 12-month EBITDA, so it's a little bit shy of 2 times net levered. That's okay. And again, on fundamentals, pretty good. Now, if we just to look at the valuation, let's call it 119, the stock price right now, it's really not expensive. So the market's asking you to pay 1.1 times trailing 12-month revenue. That's about right for a systems business. That's not expensive. 11 times trailing EBITDA, 23 times trailing cash flow. So I don't think that's an expensive stock. And so I think if you combine solid fundamentals, not scary valuation in my opinion, with a pretty solid looking risk-reward setup from here on up, with again a logical stop you can place somewhere around here, with a view to trying to take profit somewhere up here, I think that's a bad setup in DELL. Okay, do we want to stop and take some questions on anything we've covered so far before we move on? Jason is no longer with us, so if there's any TrendSpider specific questions, post them in the comments to the YouTube video and get them answered that way. But anything on any of the other stuff we talked about so far today, folks? Everyone's mic is on, so if you have questions, just open your mic and shout into the system. Alternatively, you can use the chat or the comments function here in the webinar platform.
Hi, Alex.
Hey, Paloma.
Hi, can you hear me now?
Yes.
Okay, good. I just want to ask you because I got caught in DELL. Okay, I unfortunately bought the day before, so I bought it $140.
Okay.
And I'm just holding and sitting on it. But do you think, I don't see it like a quick recovery story, like in 2 weeks we're gonna have it at 150. I think this is like a slow running position. What? Yeah. I don't know if this makes sense or not.
No, I would agree with you. Look, I'm just checking my. I own DELL. I'm a bit underwater. I was about 20 points up pre. Sorry, I can't open this. It was about 20 points up pre-earnings. Held through earnings, I thought it'd be fine. Wasn't. So I'm either flat or a couple of points underwater, but I sort of don't mind. I don't have a huge position in it personally. I agree. I think you can sort of drift upwards. I don't feel personally the need to sell. I think if you think the fundamentals tell you the company's in good shape, you think about what the big demand driver for them is going to be. It's going to be continued capex refresh in data centers, and then client devices as well. That all seems to me to be a pretty good place to be. The numbers are good. It's not an expensive stock. I don't mind waiting. For me, I'd look at the chart, and for me, if it started to drop into the 110 sort of zone, I would think, yeah, there's some bigger problem here, and I'd probably be out at that point. I don't see what the catalyst will be to suddenly sort of jump it up, but I think the earnings reaction is overdone. I don't really see why it would drop like this. One factor, by the way, might be, I'm completely making this up as I go along, but it might be that when it looked like SMCI was going to be delisted, you recall they lost their auditor, NASDAQ told them that if they didn't resolve things, that the stock would be delisted. It came reasonably close to that. DELL and SMCI are both competitors in the real world, and I think also in investors' minds, they're probably competitors from a stock perspective. DELL's a much better business, but it doesn't have the excitement of SMCI. So I suspect DELL stock benefited from people wanting not to be in SMCI but wanting to be in data center server hardware. And when SMCI got a new auditor, I suspect some capital came out of DELL and into SMCI. I have no proof for that, by the way. That's just an opinion. My own view, this is the SMCI actually was delisted 6 years ago. It's the same management team. I don't know what they're doing there, but they keep sort of running themselves into trouble, so it probably won't be the last time. So personally, I'd rather have my own money in DELL than SMCI, and I don't suppose it'll be the last time they run into trouble. So I don't know. I don't mind owning this. 110 would sort of have me thinking there's some big problem here. But at this level, I don't mind waiting personally.
Okay, so you would be comfortable just holding the position and that's it, right?
Yeah. I mean, I don't have a big position. It's in a long-term retirement account, and so it can just sit there. But I would start. Yeah, if it was me, I would start to worry about 110, something like that.
Okay, thank you very much. Thank you.
Great question. Thank you. Anyone else, folks, before we move on? Okay, in that case, let's take a look at Okta. Now, I don't have the fundamentals updated yet. I'll have those later on. But let's look at the chart. Now, this is a cybersecurity stock. As you know, this was a 2021 darling, got itself into a whole world of trouble and pain and difficulty, almost entirely of its own making, with a big merger that it handled very, very, very badly, and claimed the careers of most of the management team, but curiously not the CEO. Oddly, probably should have done. But here's the low it put in the October 22 timeframe. It bottomed out at 45. It's since more than doubled. It put in a high this year at 114, and then it's sort of sold off with software since then. A lot of these younger enterprise software businesses have caught a bit of late. So if we look at Datadog, for instance, Datadog put in a low of 60 thereabouts, and it's run up to almost 3x that. It's gone from a low of 60 to a recent high of 170. It's a weekly chart. Datadog, superb business, fundamentals great, really simple company, nicely managed, great story. Okta, bit of a mess, and has certainly not put in the same sort of explosive move up that Datadog has. So if you look at trough to peak, 45 down here, 113 up here, so it's like 2.5 times or something, but it's then given much of that back. If we zoom in a bit on Okta, I think you can definitely remain bullish on this. This is a daily chart that goes back to the bear market lows. And if you ignore the noise, and there is a lot of noise here, then I think you would probably say, let's just move this around a second. I think you would probably say that here's your bear market low, 45. Here's your 2024 high, 115. And if you look what it's done, it's dropped down, and it's held really nicely between 10th of September and the 19th of November. So over, 2 months, at exactly this 61.8 retrace. Now that's not an accident. Okay, that's someone supporting that 61.8 retrace price, and that tells you that it's a good chance this can move up. I don't own Okta, I don't love it, I don't care for how they handled the Ortho merger, but I think on technicals, I think it probably can do okay. I'm slightly surprised the company hasn't been acquired by now, particularly when it was much cheaper last year. But I suspect that along with some of these other smaller cybersecurity software businesses, that they're going to be bought out either by other software businesses or by financial buyers. So I would be cautiously optimistic on Okta. I think there are cleaner software stories around. Datadog, Dynatrace, much better quality businesses. But the stock, you've got to look at that. You've got to look at the fact that it held that 61.8 retrace so cleanly, and you'd have to conclude that's not an accident. That's institutionally traded. And I think you would think that's a bullish look. If we just look at the volume profile here, let's have a look how that looks. Yeah, so there you go, point of control. So the center of gravity of the volume is smack bang there at that 0.618 retrace. So again, that tells you, I think, that there's some committed price support there. So yeah, I'll be cautiously optimistic on Okta. Let's do Pinterest. So Pinterest, consumer internet business, as you know, just reported. It's a really nice business, very well run. Had some activist shareholder intervention in 22 and 23 to good effect. Put a big restructuring through the company, took out a whole lot of cost, which said at the time was a very, very good thing, and that's certainly continued to benefit the business. Let's have a look how it's doing. So revenue growth has fallen somewhat. So we had a peak up here, 23 points growth in the March quarter, dropped down to 18 this quarter. TTM, 18% growth. TTM is a flywheel, slower to speed up, slower to speed down than the quarterly print. Gross margins still really good, 79%. And then it's a nicely profitable business, and they manage their cash well. Look, 25% trailing 12-month EBITDA margins. And again, let's think about working capital. It's managed really well. So over the course of the cycle, it's pretty neutral. They get paid pretty much as quickly as they pay out, and as a result, profit margins and cash flow margins are more or less the same. CapEx is very limited in this business. There's hardly any of it. So it's a well-run business that know how to manage cash flow. Very nice balance sheet, no debt at all. $2.4 billion in net cash, down slightly on the last couple of quarters, but still pretty good. And if we look at the closing price today, 30.84, down a bit, okay, 30.84. I don't think it's expensive. 5 times revenue is okay, but it's a relatively high margin business. 21 times cash flow, 21 times profit. I don't think that's a big price. You'll pay that for Raytheon or any of the other defense contractors, and it's a much better business than that. So if we look at the chart for Pinterest, again, it looks like the Okta chart. It's almost exactly the same chart. So here's your great big run up in 21, big sell off, 88.6 retrace. Lots and lots and lots of buying in this zone here, which we said at the time between 22 and around $28 a share. We'd said accumulate between 19 and 31. Moved up, put in a peak of around 45, and has since dropped back. But again, I'd be cautiously bullish on this one. If we zoom in somewhat and look at the shorter term chart, I'll just get rid of that for a second. I think what we have here, is here's a bear market low. It dropped early. It bottomed in May of 22. Most other things were October. 1 up, 2 down, 61.8. That number again, retrace holds there. Perfect 1.618 wave 3 extension. I remember calling that at the time in February this year and calling that a sell. Then we have this nice wave 4 low here that holds over that wave 1 high, and then a final wave up, wave 5 up. We then get a really, really brutal correction from $45 all the way down to 26 in no time at all. That happens between June and August this year. This is the Yen-Mageddon low, $27. And then we've had since then a wave 1 up to 35, a wave 2 down. They're held just below the 78.6 at $28, and now move up. So I think this is in a wave 3 up. I'll be looking to $40 as my next target. Again, if this is one you're interested in entering, you've got a really natural stop loss. You could place it, just below this August the 5th low, and you would say that, look, if the stock gets to 25 or something, then you've got other problems. And so you're in a nice position where you've got, say, $5 down and $10 up, 2-to-1 risk reward. That's not bad. And with a longer time frame, if that is a wave 3 and you can weather some volatility and we get a 5 up, then you still only got $10 down, but you might be chasing 12, 13, 14 up. So the risk reward of entry at this point is pretty good. You're close to a wave 2 low. I always think that's one of the best places to enter a trade. Again, because of the risk reward, you can place a sensible stop somewhere down here without, so that won't crater your account if you end up tripping that stop loss. But your upside, if indeed this is a wave 3, it's pretty good. So that's Pinterest. Okay, let's take a look at Palantir before we finish off on single name stocks, and then we'll dive into the indices. We'll do about 15 minutes on indices, bonds, and oil, and the VIX. So Palantir. So fundamentals on your screen right now. Fundamentals look good. Continue. This is the main thing, which is growth continues to accelerate. So it's getting to be a sizable business now. $2.6 billion of trailing 12-month revenue, growing this quarter 30%, and that's accelerated every single quarter since June 23. That's great. TTM growth 25 points now. Gross margins good, very good actually, and 36% trading EBITDA margins and 32% trading cash flow margins. Again, back on this delta between EBITDA and cash flow. It's really good at Palantir. Didn't used to be, by the way, when it first back when it first went public. It was pretty awful. Like 20% trading 12 months EBITDA margins back in June 21, 2% cash flow margins. But they've fixed house. They run the thing properly now, and basically there's hardly any capex, and they're starting to collect and manage their cash really nicely. So it's a well-run business, balance sheet good, no debt, $4.6 billion of net cash. Order book growth, really good. So order book stands at $1.6 billion now. That's RPO, growing 62% year on year. Company is a bit squirrely, in my opinion, about what it does and doesn't include an RPO. You can read that in the 10K and the 10Qs. But as an indicative basis, fact is that RPO is big, growing, decent proportion of trailing 12-month revenue, and order book growth is accelerating. So I think on the fundamentals front, all good, really good. Clearly, the stock has run up a lot. Since we now have a PayPal mafia government, PayPal mafia stocks, are in good shape. No surprise. And Palantir, Freudian slip, no different. So the previous sort of difficult zone was around $27, and the reason it was difficult was every time it got anywhere near 27, all the insiders would sell a lot, and that would put a lid on the price. Since broken through that, so it pushed up above that in July this year, wave 1 up, 2 down, huge wave 3 up, a better than 500% wave 3 extension. I don't even know what sort of extension that is now, so hang on, it's probably a 6 or better. Yeah, 6.236 wave 3 extension. Don't see those very often. It's sold off sits. I mean, at some point it's gonna drop. Where will it drop to? I mean, it's not going to go to 0 tomorrow. It's too good of a business for that. You could see it drop to 58, 51 maybe. I mean, theoretically, it could drop to 30. I'm not sure that's going to happen. But if it does drop, then a sort of sensible buy zone, I would say. Let me just get this just done correctly. 1 second. You would say a sensible buy zone, if there is some weakness, would be sort of in that range. So the stock drop started to get below 57. I think that'd be a pretty interesting level of pullback to buy. And people say it'll never happen again, it's going to go to the moon. Well, stocks don't do that. Volatile stocks continue to be volatile, so it will drop at some point. And if it follows this pattern, my guess is it will drop to somewhere between 57 and 34. I would expect it to be higher rather than lower in that range before another move up, which might put in a further high up and over the most recent high. So I think the stock looks pretty good. You have to be brave if you're buying at this point, but if you have faith and belief in the stock, all well and good. I don't. I sold back down here. Reason I didn't want to be dumped on again by insiders. Would I enter again? Yeah, sure. I just would look for a better setup than now. So fundamentals really good. Valuation's kind of nuts, but of course it's not valued on fundamentals. It's valued on it being, a story stock and a most favored nation sort of stock. So 72 bucks. You're paying 200 times cash flows, 60 times revenue. So I mean that's not you would never buy this because of its valuation, but you wouldn't necessarily sell it because it's valuation either. That it's not valued on fundamentals. No one's marking this as a revenue multiple and saying is that the right revenue multiple. They're looking at the momentum the stock has and the most favored nation status that it has. That's what's driving the stock. So I think potentially interesting buy on pullbacks here. I did and would already have sold up here. If you didn't, then congratulations, you've done very, very, very well. We'll see how it plays out. My guess is a pullback and then another run to a new all-time high would be my best guess. Okay, we don't have too much time, but why don't we run briefly through the short-term index charts, and let's look at the futures to do that. So let's look at the S&P first. Here's the ES E-mini futures. That's how I think we are. This chart starts, it's a daily chart, starts at the August 5th lows. We have a 1 up, 2 down, 50% retrace, so a pretty bullish wave 2, as in not much of a correction. I think we're in wave 3 up now, and I would expect to see this crack 6,300 before too long. Stalled out here at 6,100. Lots of options market pressure there, which I would expect to be overcome at some point. So I'd be looking for 6,300 at some point before another sell-off to not less, probably the 5,700, maybe a bit higher, and then a final push higher in this cycle. So I could see that this might run higher towards the end of December, sell off, Q1, and then find its feet again to a new all-time high. I think, we've talked about a lot. Where is the top for this longer run cycle? You definitely could convince yourself we're close to it, but until it rolls over and starts to sell off, well, we're not there. And I certainly wouldn't view, a half point to drop today as being indicative of major trouble. Look at the Nasdaq, same chart basically. So here's the August the 5th lows, 1 up, 2 down, 61.8 retrace, a bit deeper for the Nasdaq as usual. Nasdaq I would expect to hit 22,900, maybe 23,000 on the futures before again another drop down to probably not lower than 20,000 on the E-minis and maybe above. Potential buy zone down there before another push higher. Same time frame as the S&P. Dow, I think probably that was a wave 3 high. I think I sort of bought a bit of short Dow earlier this week. Did okay with it. Clearly should have held it. Thought about buying it today. Didn't. Figured that we'd had 1, 2, 3, 4, 5 days down already. Thought we might see a bounce. Didn't get one, so that was a mistake. This is on the YM futures. If we get to between 42 and 43,500, something like that, I think that's probably a buy opportunity down there for a 5th wave run up. And then the Russell, I wonder with the Russell whether that was a wave 5 high. Obviously, I don't know, but it might have been. We want to see if it's not, and if the wave 5 is going to terminate in this more typical 0.5 to 78.6 extension, you want to see a bounce soon. So that's see the Russell. Prasad, you're on. Yeah.
So question on the Signal AI service, right? Like are you able to share like how the Signal service is doing compared to these market swings, right? In the last few days, the market has been falling kind of. Like, are you able to, just share, how that service is doing?
No. No, but I can. Let me tell you how the Signal AI service works. Okay, so it's a risk management tool. So you can use it. So I personally run a pool of capital purely off of it. So it comes in 2 flavors at the moment: SPY and QQQ. Okay, I have an account dedicated to running purely off of those signals. and it's the simplest of services that you can imagine. So it spits out the signal after the close every day, and it basically says risk on or risk off. What it means by risk on is it does not think that a material correction in the market it's covering is about to happen. Okay, so the model thinks, keep your capital in harm's way. Risk off says it thinks there's unusual activity in the market where it thinks that the market might correct. Risk off. And so the purest way to use the service is to do that, which is when risk is on, leave your capital there. When risk is off, sell it. You can make it more complicated. You can hedge when it says risk off, but the model is not designed to help you to buy dips. It doesn't do that. What the model does is go, okay, there's trouble ahead, or I think there is. Take your capital out of harm's way, and then I'm going to tell you, Mr. User, when I think the storm clouds have cleared. And how it does that is it goes, when the market's back to where I left off and it looks like it's going to keep moving up, risk back on. Now, what I can tell you is, again, the pool of capital I run purely off of that, and I run it in SPY and QQQ, and I also use UPRO and TQQQ. That's not, by the way, part of the service right now. That's beyond the service scope, but I choose to do that. It's doing very nicely. And more than that, it's no stress for me. Right? I don't even look at it. I've seen the back testing the model back 15 odd years. I have great confidence in how the model works so far. No model's perfect, but this one's going well so far. So I sleep really easy at night with that. Not least because it's index ETFs. The S&P is not going to go to zero tomorrow. Neither does the Nasdaq. And if the model goes haywire for some reason, well, I can just hedge it, right, or take my profits. So we don't mark to market its performance every day. It's not how it works. But the account that I run purely off of its signals is doing really nicely, and it causes me no stress whatsoever. So that's the experience so far. You're welcome to try it, Prasad. You can buy it on the monthly. It's not expensive. So try it and see if it suits you.
Got it. And can you how has the result of it been? Like, you've been trying for the last few months, right? What kind of returns has it been compared to just plain old SPY?
I don't have that to hand, Prasad, and we don't, we don't measure and promote it that way, right? So it's like a monthly subscription costs you $100 and something. It's not expensive. So if you like it, if you like the look of it, try it, right? But we don't, remember, we're a research firm. We don't market on performance. We're not telling you what to do with your money. So we don't say, well, buy this thing here and you'll make X versus the market Y. We're a research firm. We don't market that way. We're SEC regulated. The SEC frowns on that kind of marketing. It's not how we do it. What I would say to you is, I personally, I can't give you a more confident statement than that. I run, a significant allocation of capital purely off of that service, and I'm really happy with its performance, and it causes me no stress. That's the biggest confidence statement I can give you. So try.
How many units is that? How many units do you have it? That portfolio of that.
Hang on a minute, I'll tell you. Hold on. Just 1 second. Just a second. Uh, 26 units in total.
Between QQQ and SPY service, yeah?
Correct.
Got it. Okay, sounds good. Okay.
So that's not nothing for me. So by comparison, my biggest single position in anything outside of that is a 40 unit position. So it's a pretty significant allocation, and again, it causes you no stress, and it's done really well. So try it, see if you like it.
Okay.
Folks, if you go to our website, SessionCapitalResearch.com, there's a button on the top that says Signal Flow AI. Have a look on there and take a look. Okay, folks, look, we're out of time. It's 5:30 now. Any last questions?
Just very quickly, imagine this is a horse race. What would you rather long S&P 500 or NASDAQ?
What just in general?
Yeah, in
Okay, you're dropping out a bit, Paloma, but what from now to what, the top of the cycle?
from now to January, a month.
Nasdaq probably. Yeah, Nasdaq probably. I think tech has been out of favor for a bit. I'd probably own the Nasdaq. Now, if you look at it, just look at the futures, right? So Nasdaq is ahead. It's moved up, quite convincing the last few days. The S&P sort of stalled out a bit. Personally, in general, I'd always rather own the Nasdaq, because as long as you can wear the volatility, you get more upside, right? So in general, I would always answer the Nasdaq.
Okay, no, because the Mag 7 is just going through the roof, so that's why I'm asking.
Yeah. I personally, Nasdaq for me. I have much more capital in the Nasdaq than I do in the S&P. Much more.
Okay, super. Thank you, and sorry to take time.
All right, thanks, folks. Okay, we're going to finish up. Recording we'll post in a couple of hours, as always, once we're upscaled into HD. Thanks so much for attending. Recording will distribute over all the usual platforms. So two things: if you're interested in the Signalflow AI service, head off to our website and look at Signalflow AI right at the top of the page. And for TrendSpider, scroll down. There's a button there called Get TrendSpider, and again, there's a 75% off, or up to 75% off coupon there. Again, for disclosure, we're a TrendSpider partner. If you sign up for a paid plan using that link, we may receive a referral fee. Thanks, everyone. Talk to you all soon.